Okie dokie. Hey everyone. It is April 9th, 2026. We have about 7 minutes until the opening bell, and I am streaming live on YouTube. Getting a little better at this tech stuff, and got everything a lot set up a lot better. So it's a learning process, inch by inch, it's a cinch. I took a clip of one of my. I took a clip from a live stream that I had on Monday, and posted it on TikTok, and it did absolutely horrible, absolutely horribly. It was about me talking about the relationship between the stocks and crude oil, and how whatever crude oil is doing is affecting the stock market, and so on and so forth. It only got like 190 views. I mean, I have on my TikTok, I have videos that get like 5,000, 10,000, 20,000, 30,000 views. And when I film, usually when I film a TikTok video, I get in front of my screens and I turn on my camera on my phone, and my phone has the streaming software, and I actually spend 30 minutes or 40 minutes and do multiple takes to get a good high quality video with good lighting that has me pronouncing and speaking well, and gets the message across quickly with a strong hook, and gets people's attention right away, and makes it so that they're going to spend more than 3 seconds watching the video. And so I wanted to try, taking a clip from the live stream and posting on TikTok that wasn't necessarily designed for TikTok. It was just a section of the stream and not a video designed for TikTok with a attention getter, a hook, and gets right to the point very quickly that people on TikTok like. And it did horribly. It was just me rambling on, and it only got like 190 views. So we got 3 minutes until the opening bell. So the videos that are on YouTube, whether they're shorts, whether they're clips, or a live stream, they are, and not just me, but other people as well, they're not designed to get your attention right away, but they go into the weeds. And if you want to learn about the market, I think that you should be prepared to go down the rabbit hole. This is not simple stuff. This is complex stuff, And so what gets me is that it seems like people on TikTok are trying to learn about complicated topics. And trading, investing, the markets is a complicated topic. And they're trying to learn about this stuff, but they're not willing to go down the rabbit hole. And I don't think you can have your cake and eat it too. So I love YouTube. I love streaming on YouTube. I love that I can go down the rabbit hole and talk about complex stuff, because interesting, complex stuff is fun, I think, and it entertains your brain and keeps you engaged, and keeps your mind working, and challenges your intellect, and challenges your self to learn more and become a better person and everything. So anyways, I just wanted to say that I love doing this on YouTube. So as we go into the opening bell, we have about a little less than 2 minutes, and the S&Ps are down right now, and so is the NASDAQ, but they have a little bit of a bid as we go into the opening bell. They're climbing, and as you can see here, we got oil on the screen, as oil is the driver of the market. But let's take a look at the S&Ps. And as you can see, they are down. They're down about 12 handles, and the Nasdaq's down about 3 handles. But they're moving higher, as you can see here. And you take a look at Nasdaq, you can see it's moving up, even though it's down and almost unchanged. So this market is close to unchanged as we go into the opening bell. We have a minute left, and you see I showed just a second ago, crude oil is up by about $4.80 as we go into the opening bell. It got above, just got above $100 a barrel, and it's backing off from that. And as crude oil is backing off from $100 a barrel, you're getting that little bit of a bid higher in the S&P 500. So let's take a look at the volume as we are 17 seconds away from the opening bell, and we take a look at the volume for the S&P. We're at 200,000 contracts traded as we go into the opening bell, and that's light. It's a little light, It's not super light, but it's a little light. And now we are open for trading, and taking a look at the quote board here. We have the Nasdaq up 10, the S&P's down 10, and I'm looking around at various tickers. And I do have Micron calls. I bought some Micron calls yesterday in the afternoon as we're getting close to the closing bell. And Micron is popping here. So that's working out good for me. I'll take it. Better than a sharp stick in the eye. Meta is the driving stock that is carrying the market right now. And that is, even though we are unchanged, the biggest Mag 7 stock or big cap tech stock is Meta, up on the news from yesterday that they released a new large language model, and that pushed the stock higher yesterday, and then it sold off from that news, and now it's gapped up higher today. So Meta is acting strong, and that is the big cap tech stock that is up the most. Now, Amazon is up by a decent amount too. So Amazon is up a little over 1.8%, and that stock is higher as well. Meta is up by over 2%, and Amazon is up by close to 2%, and Amazon is up close to 2%. So those are the two big cap tech stocks that are driving the market. Tesla's unchanged, and Nvidia is down. There was some news on Amazon that is driving the stock higher. Andy Jassy, I think, had a like an annual newsletter. And they basically said they're coming for Nvidia, and that being said, Nvidia is down by about 70 cents, just a little bit on the day. And with all that said, the quote board is pretty mixed. You got a lot of stocks green, you got a lot of stocks red, so it's pretty mixed right now today. So lots of rotations going on, and you have some stocks that are, you scroll through my list of stocks, you see a lot of stocks that are down and other stocks that are up. And depending on what stocks you're in, it depends on if you're up or down. And net, the indices are close to unchanged. So And Micron's backing off a little bit. Western Digital is up a bit, but let's see if it's backing off. Yeah, Western Digital's up, but it's backing off a bit, and even Meta is backing off a little bit. So we have some stocks backing off a bit. You know, Meta was up over 630, but now it's at 625. So of course it's still up on the day, but it's backing off a bit. And Amazon was up by 1.8%, and now it's up only 1.4%. So it's backed off a bit. Let's go back and take a look at the Nasdaq as a whole, and it's, you know, reversing a little bit here. So my trading account is slightly down on the day, just by a small amount, but at the open I was up a little bit, but now I'm down a bit. So one stock that I keep a close eye on right now is Bloom Energy, and it is having a very nice day today. Up $4, up 3%. I like this trade. I like this right here. I'm gonna buy some calls in Bloom Energy. So I like this tape action, and I'm gonna buy some slightly in the money calls in Bloom Energy. So I'm looking at the April 2026 calls. I think I'm going to buy the 148 calls, slightly in the money, and I'm going to pay about $11. But I may have to raise my bid here. One of the problems with Bloom Energy, it's not super liquid, so it may just be better to buy the stock if you can. But I have so much stock now in Bloom Energy, I can't. I gotta, for a short-term trade, I gotta buy the calls. So I bought the 148 calls in Bloom Energy. For the April 17th expiration. So I bought these calls right here, and I paid $11.80. So that was my trade right there. That was my trade right there. I bought the 148 calls in Bloom Energy, and I paid about $11.80. So that was my trade right there in Bloom Energy. And right now they're up a bit, as the stock is, as the options are trading $12.30. So I like the action in Bloom, and so the way it's moving right like that, I bought the calls. And Nvidia is bouncing back a little bit. It was down 80 cents, but it's up a bit. It's bouncing here, so that's a good sign. And Micron's bouncing back. It reversed a bit, but now it's coming back, and I have those calls. So I'm going to keep holding the Micron calls. And one stock that I have been keeping a close eye on for a while that I own shares in is Palantir, and it is down again today. It broke through 140, and now it's right at, you know, it's holding the 135 line, but I don't like how it broke 140, and you know, I got to take a look at a longer term chart here in Palantir. I want to take a look at a long term chart in Palantir, and it is, you know, trading slightly lower than this swing low here from late March, and it is breaking that level and is below the lower Bollinger Band, and so this is very technically bad action in Palantir, and you see that big reversal in the momentum to the downside, and so I don't like it below 136, and definitely want it above 135, and we're holding there onto it right there. Now we're down below 135, so this is some bad action. The next level of support for Palantir is right around the 126 level from the February Those are the February lows. So this level right here, right at 126, is it's a critical level because you have two data points from February, which forms a support. This level that we broke today, right at the 130 at the 136 level, that is just a pivot. That's just a reference point. You need two data points to constitute support or resistance. That's classical technical analysis. So this is a key support level in the chart at 126. And if it breaks 126, then Palantir has some serious problems. And the big rub for Palantir is that it's in the AI field. It has fantastic growth, but what gets a lot of people with that stock is that the forward multiple on Palantir is so high. It has like over 200 PE multiple. So it's an overpriced stock. It's an overpriced momentum stock, no doubt about it. And you really can't argue that in any way, that it's just an overpriced stock. But it was a top tier AI stock, which is what propelled the stock so much higher. The rub was that it had such a high multiple. It went from 150 to 200. I think the multiple at some point was even in the 220s and 230s. So the stock is expensive by any means from a fundamental point of view. And even though it had a high growth rate, the multiple was still super, super high. So even with a super high growth rate, the multiple was still high that made the stock, just expensive. And now the stock has not really done anything since, August of last year, and it's catching up. Now, long term, I'm very bullish on Palantir, but to see this sideways chop, chop, and bearish action, chop, chop, sideways, and bearish action on Palantir makes a lot of sense. But the thing is that, I own shares for the long term. I'm going to own those shares for the long term, but if you have a shorter term outlook and you don't want to hold through a stock that's basing over a long period of time, even though the thesis is still there, the long-term thesis is still there. But if you have a short-term outlook and you want to take that money and put it into something else, that is definitely justified for a stock like Palantir. I've found it's better to hold through a base and trade options on it. Do stuff like covered calls, overwrites, do stuff like the wheel where you sell a upside call and a downside put and keep churning premium while the stock bases, because when it does come out of that base, it happens very fast and you don't really have time to when you look at the chart, you're like, oh yeah, I could have bought there, but in hindsight it's a lot more difficult than it looks like. And because the market is choppy the way it is, I think it's better to grind out premium and hold the shares for the long term. But if you want to take that money and put it into a fast money stock and you have a short-term time frame in a stock like Palantir, I totally understand that. It's not a cheap stock. But I do love the CEO, Alex Karp. I think he's a total nut job. I love how he looks like he just got electrocuted, or he's like just had sex with the monster from Frankenstein. I don't know. One of the two just happened every time you see him. And it's one of the leading AI software companies. And the big thesis for Palantir that I love is that their software foundry is completely replacing what all the Salesforce software provided before. And so it's not just governments and the military that are using the Palantir software. It's enterprise and corporate America that are adopting and using the Palantir software. So I love it. But the rub is it has a high multiple. Let's take a look. Let's go back to the indices, and we go back to the NASDAQ, and it is up by over just close to 25 points on the day, and the S&P is basically unchanged for the day. And but both the S&P and the Nasdaq are getting a nice bid here. And if we scroll down, we take a look at various stocks, you can see much more stocks are now green for the day than they were about 15 minutes ago, or 12 minutes ago, 13 minutes ago. So the one stock that is killing me right now is Palantir, but other stocks that I own are doing very, very well today. Nvidia's flat, which is okay, and other stocks are doing well. I own Amazon, it's up. I own Broadcom, it's up. I own Corning, that's up nicely, and Micron's up nicely, and Caterpillar's up nicely. So I'm having a good day today. I'm making money. I'm not making a huge amount of money, but I am making money. And one of the reasons why I'm not making a huge amount of money is because Palantir is dragging me down. So it is what it is. I made such a good amount of money in that stock last year. The stock is basing, and so I just have to wait through this. And to be honest with you guys, I don't want to pay the taxes. That's one of the main reasons I don't sell stocks, because if you hold through bases, you can make a lot of money once the stock breaks out of a base. And the thing that nobody talks about is that, yeah, you can sell the stock, pay the tax from a big gain, sell the stock, pay the taxes from a big gainer, and then the stock bases after a couple months, and it breaks out, and you miss out on the breakout, you miss out on those gains. It's better just to hold the stock. If you have a good fundamental thesis, it's better just to hold on to the stock and trade around the core position by doing various strategies like covered calls, overwrites, stuff like the wheel, sell puts, sell calls. And then you can take some of those calls and puts that you sell, use that money and buy calls when the stock makes a big run higher, or buy puts and hedge off your position. So I'd much rather do that stuff than sell the stock, pay the taxes, and risk missing out on the next big move higher once it breaks out of a base. That's something that nobody talks about. I don't hear anybody talk about this stuff, but I am going to talk about it. You have to factor in your taxable gain, the taxable amount of money, the money that you have to pay in taxes when you have a position. If you talk to any big trader that has millions of dollars, when you really sit down and talk with them and you ask them, like, you get down to it, why did you do this? Why did you do that? Well, I had to pay taxes. I shouldn't have sold because I had to pay my kids' college. That kind of stuff. No financial educator seems to talk about that stuff. But I think it's very important. You have to factor in your tax gains, your tax, the amount of money that you have to pay in taxes into the equation, because trading is a business and taxes are a big part of having a business. I'm not completely against selling, I'm not completely against paying taxes, but I'm against selling a position if paying taxes has a big effect into my gains. And as I speak about paying taxes, Palantir is getting absolutely crushed. So if it still keeps going down, I'm going to lose more and more of my gains, and then, paying taxes would have been a better decision in the first place, and that is part of the equation. So this is what makes the game so tough, is that, if the stock is going down, and for the short term, I'm going to keep holding on to the shares. But if the stock is in just the beginning of a big down move, maybe it's better to sell. So there's a big part of me that's kind of torn the way Palantir is acting. I do not like this action. So let's go to, let's take a look at stocks that are acting very nicely, the hardware stocks, and this may be part of it with Palantir, is that we have stocks right now that are acting very, very well. They're very, very strong in their hardware stocks. And like Micron is one of these names that's acting strong. Western Digital acting very strongly. And, Corning's acting very strongly. These are all hardware companies. These AI hardware companies, or AI exposed hardware companies, are doing very well. But the software companies have been doing very, very poorly. And up to recently, Palantir was one of those stocks that was kind of not caught up in the SaaS apocalypse. Many software stocks were doing horribly during the software as a service apocalypse, and Palantir was kind of avoiding that bad tape action. But now Palantir is getting killed. Wow. This is just a cratering. If it wasn't for Palantir, I'd be up a lot today. But it is just killing me today. And what was also interesting is yesterday, almost all the stocks were higher, but Palantir was actually down. And that sticks out to me as being very bearish. Very, very bearish. The fact that it was down today as everything else was up. Yesterday was marked by Investors Business Daily as a follow-through day. A follow-through day is a day that goes, in Investors Business Daily, in their playbook, they look for a stock that is up by a ton amount, has a huge up day on a point basis, on a percentage basis, but also has a huge amount of volume increase. So you have a big point increase, percentage increase, and you have a big volume increase, and that is a follow-through day. And not all big up days are categorized by Investors Business Daily as a follow-through day. But when we go to the S&P 500 and we take a look at a bigger picture chart here, you got the big reversal day on March 31st. So you had that big reversal day marked a possible bottom. We continued higher, but yesterday we got the big update by having a huge point and percentage move higher, but also a huge volume day higher, and that marks the follow-through day that kind of cements the bottom. And in most cases, when you get a follow-through day like the one we had yesterday with that huge point move and that big volume increase, that marks the bottom. But what's interesting to me is that in this environment that we're in with the war in Iran and the fog of war and all the various stuff going on, there's still a big part of me, historically, when you get that big reversal like we had on March 31st, and then you get up days after that, so you get not classic follow-through days, but follow-through days to the upside, And then you get a classic technical follow-through day like we had yesterday with the big percentage up move and the volume increase like we had yesterday. Historically, when that happens, it marks the bottom in the market. And Tom Lee, he's very well-known bull on Wall Street, and he loves cryptocurrencies, he loves Bitcoin, and he's super bullish on stocks always. He came out and he said, "Oh yeah, well I'm bullish on stocks, blah blah blah. We marked that we hit the bottom." I'm like, "Oh well, Tom Lee's saying that we hit bottom. That doesn't surprise me at all." Mr. Super Bowl, Tom Lee. And when you get a follow-through day like you had yesterday, that usually historically marks a bottom in the market. It kind of is the confirmation that we hit bottom. But I'm thinking that we've had a technical bottom. But we didn't have an ultimate bottom. And what I mean by that is that we could have made a tradable bottom for the short term, but in the foreseeable future, for the next week, 2 weeks, month, 2 months, whatever, I think that at some point later this year, we will take out these lows in the S&P 500. We'll trade below the 6350 level. We'll take out the 6350 level at some point by the end of the year. That's what I think. And I could be wrong. But this market is very sketchy. And the fact that we're down today after yesterday's follow-through day, that doesn't sit well with me. And I guess there's other stuff. It's more of a gut feel. There's a lot of gut feel to what I think about this. But I think there's a lot of validity that we are in a cycle of liquidity where money flows are coming out of the market. And I think that has a lot of validity. And I think that just looking at the tape action today, after yesterday, this is not the type of tape action that you get when you have a formidable, long-lasting bottom. So I think it's safe to say that we bottomed for the time being, but I think that bottom will be taken out, by the end of this year at some point. So we'll see how this plays out. For the most part, we're in this very choppy market, and on the big picture here, we zoom out here, and we zoom back in to a certain extent, but we go back to the beginning of October here, and we can get our sideways line drawing here, and we go back to the beginning of October 2025. We'll actually go back to September 23rd, right here. And we can go back to that point in September 23rd, 2025. And basically, the stock market has done absolutely nothing at all. We are sideways. We have done nothing. As you can see, that 68 level seems to have been the happy place for the S&P 500 since the end of September. And if you look at this line, you can see how multiple times we keep coming back to this level. And we are right near that level of 6,800 on the S&P right now as we speak. So I think that the 68 level will continue to hold some weight for the S&P 500. It just wants to be, the market wants to be at 6,800, at least for now. And you know, we got oversold as we got to 6,400, and it was at that point when we were at 6,400, it made sense that the market wanted to go back to the happy place of 6,800 where we are now. Now that we're here, I'm like, okay, well, we can either go back towards 7,000 or go back down to 6,400. And as I say all this, you know, there was a catalyst that moved the market higher, and that caused the follow-through day higher, and that was some type of peace treaty. But the problem is, it's just a 2-week ceasefire, and there are still, so far since the news broke, there still have not been any carrier ships that hold oil or natural gas that have passed through the Strait of Hormuz. From what I understand, there have been no ships that hold crude oil or natural gas or jet fuel or any of those types of things. They have not passed through the Strait of Hormuz. So that was part of the agreement, was to open up the Strait of Hormuz. That was the whole point behind the ceasefire. There have not been any ships that have passed through it. So I think it's pretty crazy, but I think that you could have some type of more bad war news that comes out over the next couple weeks. So it's very clear that the market does not like the war. And with all this said, you know, oil dropped by a huge amount yesterday. It got down to like $91 a barrel. But now, as I speak, we have $100 a barrel oil. So even though all this stuff is happening, we're supposed to have this ceasefire, you know, oil dropped huge yesterday, or the night before. But we're back up to $100 a barrel. So there's still lots of stuff going on. And if this ceasefire had merit, I don't think oil would be over $100 a barrel. That's my point. So we're still on knife's edge, and we still have to be on our toes for some bad news to come out that causes volatility to go up, oil to go up, and stocks to go down. So we're not out of the woods yet. And you know, with that big drop in volatility, you know, we could take a look at the shorter term chart, intraday chart on crude oil. You know, we got down to $91 a barrel. We traded down to $91 a barrel on Wednesday, and since when we traded to $91 a barrel, we kind of settled out right around $94 a barrel, and now we're back above 100. And this is like, you know, the market's really ripping higher. It's climbing higher. It's gaining momentum to the upside as we go above $100 a barrel. So there's a lot of stuff going on the screen. It's pretty crazy. You know, interest rates are higher. That's not good for stocks. And the VIX is pretty much unchanged. Okay, you know, it's not, even though the VIX is unchanged, and even with, it had a huge drop yesterday. Huge drop. We went from 25 VIX all the way down to 20 VIX. All the way to a 20 VIX. And I had my doorbell ring. Hold on 1 sec. I will be right back. Is that booze?
No.
Oh. It looks like some type of liquor. I'm back, baby. So we had a VIX that was at 26, and it dropped by a huge amount yesterday, down to 20. But since then, it's risen a little bit, and it's close to 21. So if there was more, if the market thought that the things were going to calm down, and it thought that this ceasefire had validity and that it really was going to stick and maybe go on beyond 2 weeks, and it was really going to stay, and that both parties were going to follow the agreement, and there wouldn't be any issues, I think that you would see the VIX, continue to go down below 20 towards 15. And one of the things I was wondering as the VIX dropped so much yesterday, I was wondering how low would it go? Like, where is the new floor? I didn't think that the VIX would actually end up going to like a new low of like, its old lows, like 11 or 12, somewhere very low around there. But I was thinking, okay, maybe it goes to 15, maybe it goes to 14. I think that there's going to be a risk premium, and I thought there's going to be a risk premium anyway. So I thought, okay, the VIX falls from 26 down to 20. Okay, where's going to be the new floor? It probably won't go to 11 or 12 or even 13. Where's going to be the new floor? Is it going to be 15? Is it going to be 18? Is it going to be 14 or whatever? But so far, and we're watching the VIX, tick by tick here. So far, it looks like the floor for the VIX right now in this environment is 20. And the fact that its floor right now for the VIX is 20, I think that means that, the market is still on knife's edge, and it has recognized that anything could happen. And the ceasefire doesn't have as much merit as it may have thought yesterday. And yes, we had a follow-through day, a technical follow-through day. Huge volume increase, huge percentage increase on the day. But I still think we're not out of the woods yet. I still think, we could have a news event come out, and bam, we are down 200 handles in the S&P 500, and that could easily happen. So I just think that it's very possible that this is just a tradable bottom, and it could get taken out to the downside. We can take out that low in the foreseeable future. So those are my thoughts. The other interesting thing is that even though the stock market went up yesterday, and stocks had a big move higher yesterday, if you look at skew, and we take a look at skew, which is, it measures how much more puts are expensive to calls. So even though, hold on, let me change this. Even though the stock market ripped higher yesterday, skew went higher. And if you take a look at the VVIX, this is a measurement of the VIX call options. It went down a little bit yesterday, but it stayed above the 110 level. So we take a look at the VVIX, which measures the price, how expensive call options are in the VIX. And people buy call options when they're bearish on stocks and they think that the VIX is going to go up, and they're looking, it's a way to hedge. They buy those VIX calls. And this is the volatility for VIX calls. Basically, the VVIX is the volatility of volatility, and it measures how expensive those call options are. It came down a little bit yesterday, but it's still above 110. And the fact that the VVIX is above 110 shows that there's still a good amount of hedging going on. It didn't drop to 100. It didn't drop to 80. It didn't even drop to 90. It didn't even get above 110. That shows that there's still a good amount of hedging going on. They're still buying VIX calls. And then you take that and you look at the skew index, and you see how the skew index went up yesterday. It went up yesterday. That shows that they're buying the out of the money puts on the VIX. They're buying the out of the money puts on the SPX. And you take that, and then you look at the VIX and volatility itself, and the fact that it can't get below 20. And it really shows that the rally yesterday, people short covered. So there was short covering element of it. Then there was some natural buyers, but market participants were buying stocks yesterday, but then they were also hedging. Many by buying VIX calls and others by buying out of the money puts. But there was basically, okay, we'll buy stocks, but we'll also hedge against that in case something bad happens in the future. So there's buying, there's market participants that are getting long equities, but they're also hedging. And that is not usually the case when you get a big follow-through day. When you get a big follow-through day, you don't get hedging that goes with it. So I think the fact that you have this dynamic of hedging going on, constant hedging going on, with how the marketplace is seems like it's on its toes with war news as we're in the fog of war. I find it very difficult to think that the S&P 500 is going to make new highs and just keep going higher. I think it's going to it's got a ceiling on it, and I think it also to a certain extent has a floor, but I don't think you're going to get an S&P 500 that just we have a ceasefire for 2 weeks and nothing bad's going to ever happen again, and the world's back to normal. We're going to go up to new highs, and then we're going to break out above 7,000 and go to even to higher highs from there and get above 7,200 on the S&P 500. I just don't see that happening. I see that we are still in a trading range, and we're right back to that 68 level in this sideways range that we've been in since late September. So this market's going to continue to frustrate the momentum breakout traders, the buy high, sell higher guys that are looking for stocks to break out and just rip higher. I think they're very, a lot of momentum traders are like, oh, finally we got a follow through day. Oh, finally the market's, moving up higher. It's ripping higher. Whew. So we go up a little bit higher. We can get a breakout, and our favorite stocks can go up and go higher. We'll be good. We got a bottom. To go full circle, that's what Tom Lee. That's what kind of person he is. He's a momentum guy. I don't know. I don't see it. And a lot of it's gut feel, but looking at everything, looking at all the stocks, looking at the indices, one thing here that I want to point out is a positive side is that this, on a weekly chart of the S&P, this slow line has been trending down since late August. And this yellow slow line, for us to get to a bottom, we needed that slow line to get into the negative, and we finally got into the negative. It would make sense that this slow line continues to go down to a much lower level, around 125 or 110 or something like that, where where it's been before, right around 120, negative 120 or so. However, it doesn't have to go down that low. You know, right here is, in this case, it didn't get too low before it turned around. And now that the yellow line is negative, it constitutes and supports the thesis that, it can now turn back up and go positive. And now you have the rate of change now back into the positive, and you have the fast line has now turned up. It makes sense that these indicators, the fast line continues to go up, it goes into the positive, and the rate of change continues to go higher and makes, or tries to make highs. And as that happens, the slow line kind of turns up and begins the process of going higher. So if there is a bullish case here, it's that we may have completed the cycle of the slow line going from positive to negative, and now it could go back into the positive. So that's very bullish for the S&P. And it's the same story looking at the NASDAQ. And as you can see, the NASDAQ slow line has been in the negative for a while. So it makes sense that the market forms a bottom and starts to go higher after it continues down and went into the negative for the NASDAQ as well as the S&P. So it's very bullish, and all this is happening as my Palantir is getting absolutely crushed. But it is holding the 130 level, but the stock was right around 138 at the beginning of the day. So something may be wrong with that stock. So that's what you get with me. I talk about my winners, I talk about my losers, and I talk about my thoughts on the market, what I think can happen. It's just that, and there's another thing, like, I don't know, and it's hard to describe this completely, but my gut feel is that this market has not completely bottomed yet. We never got a rinse out, like, brutal down day where like everything's down just massively lower. We never really got that washout where like 490 stocks are down on the S&P or something like that. We got oversold on the short term. But even that interview with Warren Buffett, he's like, we're only down 10%. This is nothing. He's got a good point. We were only down 10% on the S&P. Why can't we be down 15 or 20%? Well, and then you have like a couple days where you're down, like we have 490 or 495 stocks out of the S&P 500 down. You have like the advanced decline line down like over 2,000 or 2,500. We didn't really get that big day where you get like a negative 1,200 tick reading or something like that. We didn't really have that washout down day yet. And, we're getting a bounce here, but I don't know. I think this is just a tradable bottom. It's not a formidable bottom. And I'm going to stick with that. I may be wrong. And the fact that IBD has a follow-through day, it's kind of shows that I may be wrong. Because historically, when you get those types of, follow-through days like we had yesterday, and IBD is Investors Business Daily, and they mark it down on their website. Usually, that's the bottom. That confirms that we had a bottom. It's early confirmation, but my gut feel is that we're going to take out those lows that we had. And that low was on March 31st. So my gut feels that we're going to end up taking out those lows. Now we could rally for another, month or two, keep going higher, get above this Bollinger Band, keep going higher, get to 7,000, maybe get a little bit above 7,000, and then roll over again. That seems like a much more a higher probability outcome. Is that we've bounced, we're at the happy place, the middle point of the range. We go up, we keep going up, we get towards 7,000, and then we kind of roll over. And let's go back, let's maximize this S&P 500 chart. I'm going to go back to a period of time that reminds me, it's starting, and more starting to remind me of where we are now. And I'm going to go back, and I'm going to go back in time. Let's go back 20 years. Wow, that's a long ways back. We have the tariff, this is the tariff Liberation Day sell-off. This is the 2022 inflation sell-off. This is COVID right here. This is the original Trump tariffs. And there was something called Volmageddon that happened. So that's Volmageddon. Well, that's Volmageddon. So this is Volmageddon right here at the beginning of 2018. And then he instituted tariffs in late 2018, and that caused a sell-off. But what I'm going to go back to is a period of time that began in late 2014 and lasted to the beginning of 2016. And the market really didn't do anything at all, just lots of back and forth action. And if you look at that, I think what we're going through may be similar to what we may see, or what we saw back then. It's very similar to what we're starting to see now. Not exact. You're never going to see the same pattern exactly. But as you see here, for a good, from September 2014 all the way to, the end of 2015, we did absolutely nothing. And we had multiple big sell-offs, but we were inside a range. And we finally, even though we had sell-off periods at the end of 2014, we had some down moves here, we had some down action here, then we had more sell-offs here. We didn't really get a washout until the beginning of 2016, where everything was super oversold. We got the washout, you got the big sell-off readings, and then the market actually bottomed on the Friday before President's Day. But as you can see here, before that we bottomed here, you had multiple big up days on high volume, and I think Investors Business Daily had technical follow-through days here in October, and also here in October as well. And those follow-through days turned out to be tradable bottoms, but not the ultimate bottom, which came in February of 2016. So this is just a guide of what we may be seeing happening. And I can easily see, we go back to a 5-year weekly chart. We go back to here, we could be having that very similar type of rhythmic pattern where, we had a little drop here, then we went up, then we're coming down, then we're going to go back up to 7,000, and then ultimately come back down to 6,400 again, and maybe 6,350 before we have an ultimate bottom. So that's kind of what I have in mind as like where the market is. And Michael Howell talks about this a lot on his Capital Wars Substack, and he also has a lot of podcasts, that the liquidity cycle, money flow cycle, is in a part where money is coming out of the system to refinance their debt. Companies and corporations, companies, and investors need balance sheet capacity. They need money on their books because they have to refinance their debt, and they have to do it at higher interest rates. So as a result, that money that would go into the stock market is being used to show that these companies, these investors, have money on their balance sheet to get new loans. And we're in a part of the cycle where there's lots of refinancing going on in the system, and that is a negative on the stock market. Another person that talks a lot about this is Garrett Baldwin. He's on YouTube and he has a Substack as well. So there is lots of precedence for this, and I think it has merit to a large extent. From a bigger picture point of view, I think these, like the fact that money's coming out of the system. So if money's coming out of the system to refinance debt, it's not being used to bid up stocks. So even if things are very bullish, and dynamics are very bullish to make stocks go higher, they're only going to go so high before the investors that bid up the stocks run out of money. So that's what I think. We continue to watch this market. Lots of stocks have kind of given up the ghost. Now Micron is actually down. Let's go back and take a look. You have the S&P. Let's look at let's go back and take a look at the shorter term chart of the S&P. We see this is the daily chart of the S&P. We have completely reversed, and we are, we're still down. We're still close to unchanged, but we're down about 15 handles. The S&P hasn't done much, but we go back to take a look at the Nasdaq. It's fallen a lot more. It's down by we're down by 0.4%. We're down more than the Nasdaq. The Nasdaq's down more than the S&P, and a lot of stocks that were up are now down on the day. Robinhood's down, Micron's down, Western Digital's down. My Corning's still up, and I bet, when I take another check of my portfolio, I was up decently by a good amount. Now I'm down on the day by a moderate amount. So I'm losing. Let's take a look at those Micron calls that I bought yesterday. They're down by about 29%, right at the level where I need to decide. I'm going to close them out. I bought them yesterday. They were up by a small amount, and now they're down. So I'm going to close them out. And that is that. So I am out of the contest in those calls. And I have Bloom Energy calls, and they are unchanged. Those Bloom Energy calls are exactly unchanged. They have not done anything. And Bloom Energy has backed off a little bit, but it's still up by over 4.7% on the day, so it's still strong, but it has backed off a little bit. And for the market as a whole, we're at the lower end of what seems to be a range day. Look at the Nasdaq here, and we zoom in on today's session, and it seems to be a range day. So at these levels, at these lower levels of the range for the day, I think you can look to buy for a scalp, for a short-term scalp, and I am going to show something here. That is a good trick. So we're close to this at the bottom of the range. We could take a look at. Let's see if I can get this. I'm looking for an indicator. I'm looking for an indicator that I can show you guys that you can use. I can show you guys. Looking, but I can't find it. I may have to show you guys on another day. But basically, I was looking to use an indicator that on a short-term chart that shows divergences on an intraday basis, and I'll set that up for you guys and show you on the next live stream. I'm going to try to be on tomorrow morning. Same time, around 9:20, and before the opening bell. And now my account is close to unchanged. I'm still holding these Bloom Energy calls, which are up slightly, and I closed out the Micron calls that I bought yesterday for about a 28% loss. They're right at my level where I take I cut losses. I got out of those, and Micron has reversed, and it's just this tape action. Like, this is the thing. Like, all analysis aside, you don't really get, like, if you have a strong, usually when you have a strong follow through like you had yesterday on a bullish catalyst on news with strong volume, you may not get the same amount of volume. You usually don't get the same amount of volume the next day, but you usually get a very bullish tape action. And the fact that you're not, and there's this many stocks that are red, and the indices are red, and crude oil is up $7, now above $102 a barrel. I just don't see, this bottom having legs. I only think it's a tradable bottom, and I don't see the market making all-time highs. I can see it going to 7,000, but I don't see it breaking above 7,000 to the upside and continuing higher. I just don't see it. So a lot of this is gut feel. I just want to make that perfectly clear. A lot of this analysis is not just everything I talked about, but a lot of it is gut feel. It's nothing specific. It's just gut feel. In my mind, usually when you get a reversal day, you get the follow through day, you get the upward movement stocks like we had over the past couple of sessions. After the follow through day, you get another big up move. And the stock market's down even as oil's ripping like this. So that also means that the inverse correlation between oil and stocks post ceasefire news continues to stick. So even though we have this bullish news from the ceasefire that caused the big update in the market, the negative correlation that's driving stocks right now continues to be crude oil. that continues to stick. And the VIX is still at elevated levels. Skew index is rising. And the stocks that led yesterday, a lot of them are down. A lot of them are down. And the fact that they're down is more confirmation just by looking at the tape action that the bull move higher doesn't have legs. So I think everybody needs to be careful. So that is it for today. I will see you all later. Make sure to like my videos and subscribe. It helps my channel very much. And in a perfect world, I would like to only make money from doing this by revenue from YouTube and not having to charge people down the road. I want this to be free for the people. I really don't want to charge people if I don't have to, but at a certain point doing this, the problem is that any business runs into, if I'm going to get this YouTube into a business, the problem is at a certain point I gotta have a revenue model, and I can't keep this free forever. I want to, but I don't know if I can. So like and subscribe to my videos, and I will talk to you guys. See you guys all later. Take care, and bye-bye.